Hello, everyone, and welcome to the Buck Stops here. I am Catherine Murray. Well, I wanted to bring you some insightful market thoughts and commentary today from somebody who I've been talking to for years now. And that, of course, is Kim Forrest. She's the founder and CIO of Bokeh Capital. Kim, great to be able to be with you and catch up. Thank you so much for being here.
Always a pleasure.
Thank you. Kim, I think that it's really important to, take a look at the market and see where we're at versus expectations. There's a lot of mixed economic data. I think the market has had some great runs, and the question is whether or not we can continue, and especially given the fact that inflation last week was hotter than expected. Um, so what does that mean in terms of the Fed, the economy, the strength of the economy? Where do you stand right now as you look at the markets?
Sure. Well, I first have to explain that I was trained in this industry as an equity analyst and I grew into it. So I am not a bond person. So my glass is always half full, right? Like even
Right.
in down times, I just want to explain that. But even that being said, this is a time of change for the economy. That's clear. I think we're finally coming out of the COVID supply disruptions, which caused a lot of the inflation in everywhere in the world. But in the US in particular, we had direct cash payments in 21 and 22 that really accelerated that because, rightly, a lot of people were out of work, but maybe there was just too much cash flowing in the system and that needs to work itself out. And I think now that we're asking, what are we left with? Where does the growth come from? And
Mm.
I think there's still growth here, at least in the States. There are a lot of lower jobs that advertise like outside of the establishment that wants to hire them. There's a ton of help wanted signs. So there's still a lack in certain sections of the employment area. So I think that is always a positive, especially seeing um, small firms still hiring. So,
Hmm.
but it's troubling. You're right. The economic data doesn't match at all. But I think we are going through a time of turmoil, but we're going to come out where inflation does reach that target. And the Fed is just going to have to be forced at some point to lower, not only because economic conditions are going to point to it, but if you look around the world, we're still a very high interest rate environment. And that will make our dollar way too strong for the companies in the US that want to
Hmm.
export their products.
Right. Well, it sounds as though then your premise for why you are positive, and people should understand that the bond people in the markets tend to be negative, and equity people like you
Yes.
and myself, we're always the glass is half full. That was your point.
Yes.
But but it sounds as though you're basically saying because the jobs picture looks strong and at least good, that and I think it's true historically. That's always been the backbone of the economy. So it sounds as though that's your underlying thesis.
Right. Well, you need growth for companies to grow, right? And if people are still being hired, that means, and we don't have enough people, that means that there's growth potential there. I mean, it really is that simple. And my other thesis for investing is this: Wall Street always rewards growth. Even the value investor, they get paid whenever their companies start growing, right? They'll buy it when they're not growing and they grow. So growth is the reason and should be one of the main factors when you're looking at what to invest in. You say to yourself, can this thing grow, whatever that asset is? And if it's
Hmm.
yes, buy it.
Right. But one of the big concerns, excuse me, coming out of the last quarter earnings results, excuse me, is what the earnings picture actually looks like for these companies. Is there growth when you listen to the company managements?
I did. I was surprised at now companies always. This is another thing that listeners or viewers have to know. Companies always set a low bar for themselves. Always. It's they're all at all
Yeah.
smart, and we see growth in this year so far. Retailers are coming out in this next week or so, but by and large, there's a lot of growth out there still that companies are forecasting.
Okay. We'll take a quick break. When we come back, we'll get into some of those details in terms of which companies perhaps to invest in. We'll be right back.